I love talking about taxes, and that's because I love legally avoiding paying them. One of the things that a lot of people kind of don't know about income taxes is really how they work, and really how much taxes they are actually paying as a certain percentage of their income. So a lot of people, when you tell them they're in the 22% tax bracket, they think that all 22% of their income is going to federal income taxes, and that's simply not true. And that's because you need to realize the difference between effective and marginal tax. So effective tax is basically the actual percentage of your income that you paid towards taxes. In this case, I'm just talking about federal income taxes. So if you made $100,000 and you paid $10,000 in taxes, then your effective tax rate was 10%. $10,000 is 10% of $100,000. However, making $100,000 per year, you're probably in the 22% marginal tax bracket at least. So if you were in the marginal tax bracket of 22%, that doesn't mean that you're paying $22,000 worth of taxes. Far from it, you're probably paying much less. But some of your money, some of those dollars are taxed at 22%, while some of the other money is taxed at lower percentages, because that is how the tax system works in the United States. It is known as a progressive tax system. So a certain portion of your money is taxed at 0%, and then a certain portion is taxed at 10%, and then 12%, and then 22%, and so on until the end of the tax bracket. So it depends on your next dollar. What is that next dollar taxed at? That is the marginal rate that you are taxed at. So you need to understand the difference between effective and marginal tax rates. But in this video today, we are going to do a hypothetical on what your effective tax rate is, how much taxes you actually pay while being at the maximum of each tax bracket. So bear with me really quick. Let me throw up the 2020 tax brackets just so you can see them. Okay, and this is just the tax brackets for single and for married filing jointly. So you can see our tax rates start at 10% and they go all the way up to 37%. There is a 0% tax rate, and that is pretty much what's known as the standard deduction. So if you take the standard deduction, whatever the standard deduction is, let's say it's $25,000, you're going to be paying a 0% tax rate on the first $25,000. Or if you take itemized deductions, whatever amount that is going to be taxed at 0%. But basically, from there on, we have 10 to 37%. And so looking at the married filing jointly, your first $19,750 is taxed at 10%. And then above that, it's taxed at 12, and so on and so on. So that is what I am talking about when I mention marginal tax rates. I am referring to the actual tax brackets, but that is not the effective taxes that you would pay being at the high end of those tax brackets. So just for reference really quick, if you do take the standard deduction, then you're going to be paying a 0% tax rate on the first certain amounts. And if you are married filing jointly, that amount is $24,800 in 2020. And if you are single, that is half of that, which is $12,400. And that is in 2020 as well. So up to that certain amount, you are actually paying 0% in taxes. But beyond that, that is when the tax brackets start, if you are taking the standard deduction. And I have so much more to come in this video, but really quick, I just want to say that tax optimization and learning about taxes is a really big part of what this channel is about. And not only that, we are about optimizing every portion of your financial life. And if you are enjoying this particular video, please make sure that you like it, make sure you give it a thumbs up, because it helps me and motivates me to keep making these videos. And at the same time, if you want to continue learning and you want to learn more about becoming a master of your own cash flow, make sure that you subscribe to the channel and you put on that bell for notifications, because every single week I am putting out new information on personal finance, and I know that there is something that I can help you with. But getting back to the tax brackets, I actually made a really cool chart that I also need to put up really quick. And on that chart, you can actually see how much your effective tax rate is in every tax bracket. So let me explain how this works, because when I made it, it made sense to me, but I can definitely see how it won't make sense to a lot of people. So starting from the very far left, you can look at the marginal tax rate. So if your marginal tax rate is 10%, I'm going to put what your maximum gross income is to be at the end of that. So that includes the standard deduction plus the 10% taxable amount in the tax bracket. So I hope that makes sense. But basically for married filing jointly, looking at that one, look at the 10%. So you are in the maximum 10% marginal rate because you have $24,800, and then you add from that other chart, you would add $19,750, which was the 10% tax rate. So $19,750 plus $24,800, that gives us $44,550. Okay, and I did that same amount for all of the tax brackets. So basically I took all of the tax brackets, the maximum amount in the tax rate, and I added it to the standard deduction. And that would be what your maximum gross amount is. So for example, another one is when you're married filing jointly and you make $105,050, you are actually in the 12% marginal tax bracket. Okay, and then from there I actually calculated the effective tax, how much you would pay on that amount of income. And that is what is next to it. And then by dividing the effective tax by their gross income, that is how much your effective tax rate is. So if you make $44,550 as a married filing jointly couple, then you would pay $1,975 in taxes, assuming that you don't have any deductions or any adjustments to your income, okay? And that would mean that 4.43% of your income would go to taxes. So if you are at the top of the 10% tax bracket, you will pay 4.43% of an effective tax. So looking at the 35%, if you are married filing jointly and you make $646,850, and that is your gross income with no other adjustments or no other deductions, you're going to pay $167,307.50 in taxes. And that means that your effective tax rate is 25.86%. So if you're making $646,000, you're paying 25% of that to taxes, assuming that you don't have any other adjustments and things. So this is all hypothetical. This is all the maximum amount of income that you can make in each tax bracket. But that's the great thing about it too, is that by contributing to different retirement accounts and different tax advantage accounts, you can actually further reduce your taxable income beyond what just the standard deduction is, because that other chart didn't take into account any other tax credits or any other tax deductions. So that is what's great. You can pay even less tax than that. So just by looking at that, that is pretty much the maximum amount of tax you would pay. So you can definitely pay a lot less than that if you are optimizing your tax life. And another note that I want to add into that is if you are making the higher income, so we saw that the higher income people were paying a higher percentage of their income in taxes. They're usually not going to be taking the standard deduction. Most people who make a lot of money, they have a lot of itemized expenses as well. And so typically they're not going to be taking the standard deduction. So they're not really going to be paying that much in taxes that you would have seen on that chart. So keep that in mind as well. And another thing to keep in mind is that was oversimplified. The amount of taxes that you are going to pay is probably going to be a lot different, even if your income does fit into one of those little brackets. So what I would advise you to do is to actually use a tax calculator. There's many of them for free online, and actually estimate your taxes right then and there. It can do it within a few seconds, and you can see what your effective tax rate would be at whatever income level that you have. And so it could be really eye-opening, and it actually could be pretty nice to see that you don't actually pay that much in taxes usually than what you think. If you're in the 22% tax bracket, you don't have to think that you're paying 22% of your money in taxes. Usually that is highly untrue, especially if you have other tax deductions and other credits that you qualify for. And if you're ready to learn more about becoming a master of your own cash flow, then make sure you subscribe to the channel, and make sure, if you haven't already, you watch this video that I made about how to achieve financial independence in 10 years or less, because in that video there is all kinds of tips and tricks and information that you need in order to become that master of your own cash flow. And thank you so much for watching this video. I'm Zach from OnCashflow.com, and I hope to see you next time.